Aside from time, I'm going to tell you that the most undervalued asset in the world, and I've been saying this for the last 2.5 years, some of you know this, is what? Silver. Silver is going to make some of you very, very wealthy. Now, I want you to write this down because you will mark my words. I've been saying this publicly from you might have to stand up here with me, buddy. I've been saying this publicly from $11. Silver is now in the 40s, having hit or almost touched off 50. All right? But silver, you have to, man. Silver is still greatly undervalued, and I want to share that with you. What are my projections on silver? My lifetime projection on silver. You ever have a lifetime projection? A lifetime projection, $250 an ounce. $250. It's just begun. Silver, in terms of inflation dollars and the whole 9 yards, it's not even begun to rise. I actually like silver much better than gold. And so on every major crack, on every major drop, when the world hates it, when you feel like, okay, it's topped, it's over, it's finished, I think you should buy as heavily as you can. Silver's $250 an ounce. My medium-term target is $100 an ounce. My shorter-term target is more like $75, $80 an ounce. I think gold is $4,000, easy. I think that's a layup. I think $4,000 gold is a layup, all right? I think $8,000 gold is more like it. Now, call me crazy, all right? This won't be the first time. But did you know that gold and the Dow Jones Industrial Average was at parity in 1935? The Dow was at 38, and gold had been fixed at what price? 35. So let's call that parity. Now, gold was held back. It wasn't allowed to trade. It wasn't allowed to move. It was caged. It was imprisoned while the Dow was let free. And the Dow went from 38 to what? 14,000. So here is the Dow going from 38 to 14,000. Meanwhile, gold wants to get out and join its brother, but it can't until the mid-1970s. Immediately when the latch was open, gold broke through the doors. I'm free, and rallied immediately to what? $800 an ounce. Then pulled back, and everyone thought gold was finished. My traders will tell you, how many of my traders are in this audience today? There's a few of you. My traders will tell you that they're taught that the second leg of any major move is always the big one. We're in the second leg. It is not even close. Not even close from a macro perspective. Gold and silver is the way to be, is where to be. These are assets that my traders are pumped. They have to be involved in gold. They are forced to be involved in silver. They are forced to play these things. They are taught they have to do these things. All right? Now, I've got what I consider to be an amazing presentation for you today. Of course, it wouldn't be anything else, right? I'm delivering it. Now, here's something interesting. I have a little north of 4,000 traders. These 4,000 traders are all over the globe. Asia, Europe, South America, Canada, North America. They're spread all over the world. They're pretty much broken up over, I'm going to skip all this introductory stuff. They're pretty much broken over 3 categories, although this is going to change very shortly. I mean, we're going to have, not only do I have, it's like 24 now, this is an old slide, 2,400 equity traders. I have over 900 Forex traders and over close to 300 wealth traders. These 2 groups are funded. These groups just follow every wealth play I do for all my foundations, all my children's trust funds, everything I do. All right? And they have privy or access to that or what have you. There are 2 more groups coming on board the next couple months. Options and futures. I don't want anything on planet Earth that moves and is traded. I don't want it to go untapped by my traders. All right? The tactics and strategies that they deploy work in everything from real estate to options to equities to bonds. It doesn't matter. Do you know why? Because financial instruments are dictated by human behavior. Human behavior is not different if you put a bond in their hand versus a stock certificate. Fear and greed is the same whether the human being is trading an option, fear and greed will be prevalent, or trading a currency or a futures contract on gold. You see the same patterns of fear, which is the right side of a bell, and greed, which is the left side of the bell, and then the transitions that happen between those two repeat over and over and over again. All right? The rise in real estate into 2008 and then the collapse. All right? The rise of anything into something and a collapse. But what if I were to tell you that the transition between greed and fear looks the same every single time? That if I teach you the transition that takes place between those two emotions, you can get extraordinarily wealthy. Trading any market, because it's the same transition no matter what the financial item is. We could trade pet rocks, Cabbage Patch dolls, houses, pieces of paper, shoes, sneakers, baseball cards, and you would see the same pattern. The rise, the transition, and the drop. The drop, the transition, and the rally. The transitions are only a very few small variations. And the key to this game is spotting when fear stops and greed begins for the very first time. That picture, if I could take a snapshot and train you not only how to identify it, but to exploit it in every time frame, 5 minute, a daily, a weekly, you'd have this game conquered, or close to conquered. We make this game a lot more difficult than it is. All right? The market's relatively simple. All markets are. They go up and they go down, and sometimes thinking between that, they go sideways. Sounds pretty simple to me. What if you stopped everything you bought from going down by a set number, 15 cents, $1, and then you let everything go and you can't sell anything unless it doubles the amount that you have allowed yourself to lose on the downside? Do you think that you could, over time, lose money with that? No. It's mathematically impossible. If you said, everything I buy, I will never let it lose more than 50 cents. That is my ultimate stop. And I will never let something I buy drop more than 50 cents from my purchase price, which means that I can only sell it $1 or more, but when I sell it, I only sell half. And then when I sell half, I immediately put a stop at break even. Do you think over time it is possible to lose money with that basic ABC system? No. It is very impossible to lose money over time. So if that's the case, why aren't you doing that? We bring complexity to the market. We are the problem. The market is a field of all possibilities. It's neutral. It has nothing to do with us. So what am I going to show you? I'm going to show you something really fascinating. I'm going to show you very quickly. Here's traders doing amazing things, but I'm going to skip all this. Here's a trader up with, we start them off small. Here's a baby trader. He's baby. He's got $30,000. His goal is $160 for the week. He makes $439 on the day. Here's $30,000. This guy makes $550. These are the symbols he traded. Beautiful. These are my babies. They're in development. They make a lot of mistakes, but they're in development. $150,000. Now, he's at level 3. All right, he's at $150,000 in buying power. No, he's at level, what is that, level 6, guys? It's level 6. He does 150. He does $1,008. These are the symbols traded. He traded 30,000 shares, so he traded kind of actively that day. But these are his closing P&Ls. And what you see, what I love to see in a trader, I usually, like when I'm standing on stage, I show you the profits. I rarely look at profits. I want to see your losses. That's the window in your soul. Look at this trader's soul. $1, $2, $6, $9. These are the symbols he lost on. But look at the gains. 800, 100. That's a beautiful soul. All right? Here's an amazing soul. No red. All right, I'd take that, but if you give me red, give me little red. I like red. Red can spruce things up a little bit. Sometimes when you're too consistent with winning, you're not doing what enough of? Risking. If you're too consistent, let's step it up, buddy. Losses are a part of this game. You should be losing a certain percentage of the time. All right? But this trader in a single day did well, $1,000. Here's my 10-year-old. I have a junior program, 10 to 14 years old. I believe it's a travesty today that our children grow up and they barely know how to, they barely know the difference between stock and livestock. And even the ones coming out of higher educational schools, the markets make this world turn around. And yet, no one teaches them the basics. We've got the most ignorant people coming out of school as it relates to the financial markets. But yes, they do get jobs at Merrill Lynch or whatever at 24 years old as a vice president. You know where that goes, right? All right, so here we have my 10-year-old. He traded these symbols for the day, had 100,000. I always start my 10-year-olds start off higher. All right, $100,000 in buying power, made $1,200. All right, here's another 10-year-old, traded 3,900 shares, $100,000, made $1,000 on the day. All right, and I find that the younger they are, the easier it is because they don't do two things. They don't overcomplicate. It's like, and they're in the video game era, so if they blow up on a trade, it's like a video game, reset. Like they're used to, okay, I'm alive again, right back, right? What do? Oh, shit. And then we carry that into the next trade. So the next trade is flavored by this whole mental state and the whole 9 yards, and we get smaller. So we have a reduction of the self. We feel wounded with a loss. Now we take a reduced self with the capital S into the next trade. And if that's a lose, we chop down the self more. And so it's the incredible shrinking man effect, right? You are less and less and less and less of a trader in every single trade. And that's what creates a spiral. You're not supposed to lose more than 50% of the time, mathematical law says, but why do you lose more than 50% of the time? You break mathematical theory because of the shrinking self. See, what math doesn't factor in is the psychological part of this. If you are a weaker trader every single trade, if you are a damaged trader every single trade, you can lose almost 100% of the time for a very long time. All right? So I know the theory, of course. Some of you are saying, well, Oliver, every flip of a coin is the same odds. No, that ignores the psychological element that links all of the flips. Do you follow what I'm saying? The psyche puts every single one of your trades together and creates a linear line. It creates a line, a fluid motion. I want to show you, those are our babies. Let me show you what the graduates are doing. Here, these are the guys who've gotten it.